Every year at the end of the year, I start seeing all types of videos on YouTube with investors talking about their big game plan for the year ahead, and with some of these investors even sharing with you that they have a playbook that can generate you tens of thousands of dollars. Never mind all of them, I'm going to go ahead and keep it incredibly simple with you here today, talk about my game plan for the year ahead, and most importantly go a step further in gifting you with 3 of the dividend stocks that I'm going to be highly focused on all year long that not only deliver through on dividend cash flow in the near term, but long-term passive income. With that, let's dive right in. So first here, a peek underneath the hood of my portfolio so you can put some numbers behind my name. As it stands right now, my portfolio is valued at $132,043.56. Now jumping into my performance, I do want you to see the beginning balance was just above $101,000. For all of you math wizards out there, that's a cool difference, a little over $30,000. All not too shabby, all things considered, based on that macro environment throughout the year. Now what exactly is my plan for 2024? Well, let me sum it up to you very simply. Invest into high-quality companies that meet 3 major pieces of investment criteria, with the first being a strong brand name. In other words, a company with an outstanding reputation. Secondly, a company with a stellar leadership team. Because let's face it, without a vision or direction from these leaders, any and all great companies just eventually die out quickly. And arguably, the most important one here is just investing into a company with a squeaky clean balance sheet. That means a company with little to no debt. Now, in addition, I'm going to admit to you I made a massive mistake in 2020 of overloading my portfolio with a ton of holdings. I'm actually still working on trimming down my portfolio to where I want to be. Ideally, with 2 exchange-traded funds and then about 10 to 12 individual stocks. So that's all going to take me some time given I have 22 stocks within my portfolio right now. Now, the 3 dividend stocks that I'm going to be focusing in on for 2024 are actually already in my portfolio. And I wanted to highlight them for you should you want to follow suit. So in no particular order, let's go ahead and get started with the Golden Arches, or McDonald's, ticker symbol MCD. Which, yes, it's a fast food behemoth to the vast majority of individuals out there. But in reality, it's actually a hidden real estate gem, as its business model calls for the building out of locations for franchise owners and then leasing out those properties to each of the owners. In other words, sure, they're a very profitable burger flipping joint, but an absolute real estate powerhouse with over $28.4 billion worth of land, making it one of the largest real estate companies in the world. Now, in knowing just that, I feel this is a company that no matter what, it's going to be in business for the long term. And I mean, it's become an icon after all. Now, even in a year like we just had with a very uncertain macro environment, McDonald's soared by over 13% as it's trading for $291 as of this video. But zooming out to about a decade, we're looking at $291 worth of sheer appreciation. But is it a buy right now? I'm afraid, at least in my book right now, with analysts forecasting only 7.9% worth of upside coming up to $314.83 per share, we should wait this one out, especially as we see plenty of recent insider sells at the executive level in addition to hedge funds that have been offloading shares worth of McDonald's. But that certainly means that I think we're actually going to get closer and closer to a buy-in opportunity with McDonald's as the market shakes. Now, as dividend investors, we should always look to get our hands on dividend juggernauts like McDonald's, coming in at a very stable 2.29% dividend yield, scoring a 77 on Simply Safe Dividends, and we can even see here very healthy metrics, especially with only a 54% payout ratio that aided in their 46-year dividend streak. But scrolling a little further down here, we can see that they've had roughly 17% on average worth of dividend growth over the last 20 years. Now, before I cover the next 2 dividend stocks in focus for 2024, I want to personally ask that you join me on this dividend investing journey by subscribing to the channel to kick off your year the right way with more dividend stock ideas, and moreover, just join a growing community of committed dividend investors. With that, let's go ahead and discuss Lockheed Martin, ticker symbol LMT, which I mention quite frequently here because of its ability to deliver through on share price appreciation and dividends along the way, as the company in and of itself is the world's leading defense contractor. Whether it's developing the latest missile systems, aircraft, or battlefield technology, Lockheed Martin is not to be reckoned with on or off the battlefield. And I can tell you that because of their clientele. They just remain an incredibly safe and reliable long-term investment. But I can also just show you through what I'm looking at here to show you the sheer strength. $141 million Navy contract as of a few days ago, or their $220 million Navy modification deal a handful of days ago, or how about 10 days back, we see yet another Navy contract, this one for $663 million. Now go ahead and ask yourself here whether a company with their largest client being Uncle Sam, year over year will ever go out of business. That's what I thought. So that leads me to the current share price here as it trades for $446 per share. And while it hasn't had the greenest of years, it did pop up after Israel commenced its war on terror. And we find now a powerhouse for all of us as we look at this 10-year chart, whereas we see over 301% worth of appreciation. Now, I'd like to say it's not a terrible time to buy in with a PE ratio here at 16. And of course, analysts forecasting more upside, $482.75 per share coming your way. But we're going to go ahead and flip the coin here to see hedge funds actually selling. And that means a negative trend. So in other words, we may have some more declines to come, but all in all, I think Lockheed Martin is a very safe investment. Now it's coming in with a 2.81% dividend yield, plenty of safety there with a payout ratio below 50% at just 43%, along with 30 years worth of a dividend streak. And get this, 18% on average worth of dividend growth. Next up, I want to go ahead and talk about an investment opportunity that I really believe holds immense profitability for decades to come, given the nature of their craft. Let's talk about Visa, ticker symbol V, which is a business in the business of payment processing, to which they're often confused with being a lender of some sort, but that misconception must be smashed because payment processing is all about collecting fees off of every transaction that a consumer makes. In short, they avoid all the risk of lending, but collect on the transactions, making for a serious money-making business. And as technology continues to advance in this space, Visa is likely going to lead the charge. As of this video, Visa is actually up on the year by 25%, trading for $258 per share. I happen to begin buying into Visa during the lows in September, but I wish I bought more sooner because we're looking at here a decade worth of growth, 401% worth of appreciation. I would definitely love to see Visa cheaper, but that would then likely require the market to be rattled before it really comes down to a price that I feel comfortable with. In the meantime, analysts are projecting over 10% worth of upside to a share price of $284.75 per share. But we have insiders like Alfred Kelly selling almost $10 million worth of shares in November, and then some before that, along with other insiders, all indicating that the stock is supercharged when it comes to its evaluation. All while hedge funds then are also selling out of Visa, which, well, then just tells us that there might be a near-term decline. Add it to your watch list, especially when the dividend remains very safe. Simply score safe here at 99, low dividend yield at 0.8%, but plenty of opportunity for it to grow. It's got a low payout ratio at 21%, and of course a dividend streak going on for 15 years with a dividend growth rate here of 18% on average over the last 10. And there you have it, 3 dividend stocks that I'm eyeing down in 2024. I want to know your top 3 that you're looking into for the new year. Definitely go ahead, drop those comments below. Keep up with all the insights by subscribing or just clicking right here to catch the next video.